All right. Can everybody hear me? Good morning, good afternoon, good evening. Thank you. Thank you. Thank you everyone. I am glad to be making this live video right away. Um you're welcome. You're welcome. You're welcome. You're welcome. Where are you from? You can type it in the comments. You can type it in the comments. Jordan, Nigeria. We have US, Afghanistan, Uganda, Kenya. A lot of people from the UK, Poland, Nigeria, Abuja, Tanzania, Ethiopia, Niger State. Everybody is welcome. Everybody is welcome. You are highly welcome. You are highly welcome. I hope you will get enough value that you expected to get today. And I'm super excited to be making this live video right now from Paris, India, Romania. Everybody is welcome. Everybody is welcome. All right. So let's get into the business of today, trading without tears. All right. Basically, we were supposed to have a guest today. Um, One of my very good friend, a very, very good trader, Bala Francis. But then I think he may not be joining us because of some challenges from his end. But then I still want you to have high expectation. If he is able to finish what he is doing currently, he will soon join us. But in case he did not join us, I want us to talk about this very, very important thing: trading without tears. All right, trading without tears. I know a lot of you guys are expecting me to talk about the technicals of trading, how you can actually trade order blocks, how you can trade fair value gaps, how you can trade mitigation block. As good as these concepts are, if you fail to understand the very key factor of trading, and if you fail to have the basic understanding of your mindset and your trading psychology, you will always be in the circle of giving back your hard effort to the market. All right. I know a lot of you guys, have understood the concepts we've been sharing so far on this YouTube channel. What I basically do most of the time is to simplify what ICT has done already. A lot of the videos I share is mostly ICT concepts. If you don't know what IC, okay, is my audio clear? Please make sure you let me know if there is any glitch from my audio, and I will be very, very glad. All right. So, absolutely correct. So, let me share some very, very few tips with you on how you can actually stay ahead of this game. All right? Because a lot of traders out there, they make a lot of money maybe the first week of trading. You can make from, let's say, $1,000 account. From $1,000 account, you can make up to 1,500, let's say $1,500. But if you don't have a proper mindset or trading psychology, I assure you it's just a matter of time. You will always give back the entire money back to the market, including the capital you have or including your starting capital. All right. If you don't have a system of managing your risks, now this is all about money management, risk management, and how you can control your emotions, how you would be able to tame yourself from taking bad trading decisions. I hope this is understood. This is what makes people successful in trading. I always tell people this, that psychology is not trading psychology does not only make the difference between a successful trader and an unsuccessful trader. I mean, it is the only difference. Trading psychology or having a proper trading mindset is what makes the difference. All right. So quickly, two things that makes traders to fail in the market. Two things that makes traders to fail in the market. Number one, over trading. All right. Over trading. If you are part of these people that you take more than 15 trades in a day, and you need to listen to this, over trading. Many of you are victims of a blown account because of over trading. You just made, if you have $1,000, for example, you have $1,000 and you were able to make up to $100 on top this $1,000 the first day of trading, which makes it how much? Which makes it $1,100. But because of that pressure, or you are not able to control yourself to be able to do proper risk management and be able to control yourself, you said something told you to still trade for the day. Your rule for trading, let's say you just want to take two trades in a day, and those two trades you took gave you $50 each. But then something told you to risk more and now add your position size from 0.5 mini lots to one standard lots. And the market will surprise you that time around, because this is when the market will now turn it back against you. It will turn against you. And what you will discover is that you've lost maybe 200. You've made 100 and you've lost 200, which will leave you with an account size of $900. That is where the panic will begin. And a lot of you people will go back for revenge trading. The fastest way to stay frustrated in the market is to do revenge trading. You know, revenge trading? Today I lost money in the market. Tomorrow I'm coming with an aggression to return back my money or to get back my money. And that is the greatest unbecoming of a lot of traders out there. Is anybody understanding what I'm saying? Yes, overtrading is a very, very bad thing. You should have a number of trading you should do in a day. Control yourself as much as possible. Control yourself. If you tell yourself, you see, let me give you a tip of how to overcome overtrading. All right. When I was trying to learn how to do money management, I will find some of my trader friends. Listen, this will not look like a proper one. I will find some of my trader friends. I hope you know that when you have MetaTrader 4, all right, MT4, You will have your login server and investor server. I don't know whether you've ever seen that. Login server and investor server. So share the investor server with your friends. Let them be watching what you're doing. You know, it's an accountability system. Tell them, guy, talk to me anytime you see me over risking. Because of that shame, you will not be over trading. You tell your friend that I can only trade up to 2 times in a day. And every time you open my MT4, you saw me over trading or over leveraging. Please make sure you call me. All right? Over trading or over leveraging, make sure you call me. If you have any good trader friend out there, share your MT4 server login with them, investor server, so that if you are scared, maybe they will take trades with your MT4, they may make mistake. If you give them the investor server, they can only watch what is happening from your end. Are you understanding what I'm saying? All right. So when you begin to take accountability of your account, you would understand that it is easy to grow an account than to lose it. Why would you lose $100 account? If anybody has lost $100 account, it is owing to these two facts. One is over trading, two is over leveraging. Let me correct it. Over leveraging. You know what over leveraging is? These are the major things that destroys a trader's account. You know, because you have your broker gives you 1:, let's say 1:2,000. 1:2,000. It doesn't mean they love you. They are actually helping you to destroy the account. Because if you have $100 account and you're using 1:2,000, it means you would be able to take up to 2 standard lot trades. 2 standard lot trade with this $100. I hope you understand what this means. They only give you more access to risks. They gave you more access to risk your money. And because you are that person that is in a hurry to make money in the market, you saw it as an opportunity to open 0.5 mini lot on $100 account. What is the ideal risk for $100 account? They said never risk more than 1% of your account. But because you are seeing $1 as a small money to somebody, you think it doesn't matter, let me risk $10. Now, what this is doing to your mind is that when you have a bigger account, you will not respect the rule of money management. That is why some of you lose a prop account easily. You all of a sudden have a big money, you want to trade that big money. All right, is that making sense to somebody? All of a sudden you want to take trade with that big money, and that is the greatest unbecoming of a lot of you people. A lot of you people out there. So I want you to do something. Hence, find your trader friend, share your login details with them, and let them just watch what you're doing. By the time you go into trade and they saw you enter trade here, some of you, this is how you enter trades in the market. Let me show you. Let me show you how you do it. Let me show you how you do it. Every time you want to take trades, you start with a very proper, let's say you do something like this. You start with a very, very proper risk analysis. Okay, let's say this. You've seen price does something like this. You've seen price shifted structure here. Oh, there is no shift in structure here, but let's assume price actually shifted structure there. And you said to yourself, okay, I want to take trade when price comes to this area. All right, when price comes to this area. And then my target is going to be right above there. My stop loss is going to be right below here. All right. So by the time price came, which one will I give? Okay, let me give this one as the best example. This one as the best example. I think that will not give me what I'm looking for. So let me give you this one as the best example you can see here. Okay, so let's assume this is your chart. And you saw price had this. Boom. You said, okay, this is a break of structure to the upside. Please come back to this fair value gap. And I want to take this trade and make some cash. So you decided to enter from here. You said, okay, I want to take my profit right here and my stop loss is going to be here. All right. So you decided to enter with how many standard lot? 2 standard lots. So price decided to start acting. You see, now price started going, but then it started coming to your stop loss. So you said, okay, I think price will still go up. Let me shift my stop loss to this place. All right. Some of you are guilty of doing this. Let me shift my stop loss to this place. So price starts doing it. Said, oh, price is coming to my stop loss again. Let me shift it further down. All right. So price keeps coming because you're anticipating that price is supposed to turn and start going up. So the deception keeps coming your way. You keep shifting your stop loss and say, okay, I just want it to come here. If it comes here, whether I like it or not, I will close it. All right. Look at what you're doing now. I know a lot of you people are doing this. And this is why you come to my DM and tell me, you now start seeing it going up and say, thank God it is going up. You did not remove your or close your position, you left it in the market. And this is how a lot of you trade in the market. All right. See what is happening. See what is happening. Now, it is actually below where it left you. Price came back to this area. You did not close it, even though price show you mercy because of your arrogance. This is what a lot of you people do. Before you know, you allow your losses to go deeper than you can afford, deeper than your account size. Do you see how some of you trade? So this is where your account is now, and there is nothing you can do about it. If you are not lucky, price will come up to this level, and that is the end of your account. Why? Because you are not using a stop loss and you are not standing on stop loss. When you have stop loss, the reason why there is stop loss in trading, it is simply because there is potential of having a wrong trades. That is why there is stop losses in the market. Let it be. If your stop loss was hit, you will have another opportunity to take trade. All right. Do you know how many trades you will take if you are risking just $2 on $100 account for? Do you know how many trades you will take if you are risking just $2 on $100 account for you to blow $100 account? Guys, tell me, is it not up to a 50 trades that you will take if you are consistently risking just $2 on $100 account? The best leverage to use on a small account, 1:50. 1:50. 1:50 is the best leverage to use. Is anybody understanding what I'm saying now? Because when I saw, okay, because when I heard people talk about, losing money in the market, I've just blown my $100 account, I've just blown $200, somebody blown $5,000. How? Why? That is the question. Why should you blow $5,000? How did you do it? How much were you risking? Do you know how many trades it takes you for you to blow? I mean, somebody asked for what is the best leverage to use for a small account. That was why I said 1:50. All right, 1:50. 1:50. It's okay for you. $100 account, how much can you risk? Just more than not more than $3. Don't ever risk more than $3 on $100 account. Yes, let it be small. Let your gain be small, but you are doing something to your mind. You are doing something to your mind. You are learning. You're becoming more confident. See, two things that over trading and over leveraging does to you that will affect your trading. It will kill your confidence. Over trading will kill your confidence. Why? Because if you have repeated losses, if you keep losing in a trade, let's say you have 10 trades and you lost 8 trades, you've won 2 trades. All right. Even if you are still on profit, these losses have done something to you. All right. It has done something to your mind. It has already affected your confidence. Yes, Alex, you have to work on it. Overtrading is a killer. Overtrading is a killer. Why should you be overtrading? Before Asian session, somebody has entered 7 trades already. Do you know that it takes? All right, guys. So we have uh, Bala Francis. He's with us. I will shortly give him an opportunity to start uh, the main thing, that is top-down analysis, how to do top-down analysis. He's a very, very great mentor. He's a very, very articulate trader. You love what he's doing. He has a YouTube channel. I would like you to also subscribe to his YouTube channel. He's an amazing person out there. All right. Yes. If you can make, even if it is $1,000. I don't want to see your winning trades. I want to see your losing trades too. Because a lot of you people know that nobody shares his losing trades. Nobody shares his losing trades. They only come online on Instagram, on TikTok, on YouTube to tell you that they have always been winning. It's a lie. That is why you have to learn this principle. Sometimes you just take some time and do more of watching. Do more of watching. You just watch what is happening on the trade. Sometimes you can learn how to control your emotion by seeing a very perfect setup and say, no, I don't want to get into this setup now. I want to come back later. Do you understand? You can see a perfect setup playing out and say, okay, let me just watch. Let me just do watching. Let me just watch it. Lot size for 5K Prof Firm account. Maybe you should check lot size calculator on babypips.com. I know a lot of you people don't know this. Let me show you where you can check lot size, and maybe it will help you guys to do a lot. Let me share that part of the screen with you. Let me share. I'm coming, guys. I want to share that lot size calculator with you. So this is position size calculator. Where can you find it? You see babypips.com. You go to babypips.com and come here. Now you start with your account currency. If you want to do this, I think they should have an app on Google Play Store or um, Apple Store. So you have a $5,000 account. How much do you want to risk? Don't risk more than 1% of the account. Let's say 0.3% is what you want to lose, or you want to risk 0.4%. And your stop loss, let's say maximum is 10 pips. See, you have $5,000 account, risk is 0.4%. That's about how much? Is it about $40 or thereabout? All right. You have pips, 10 pips as your stop loss. Now, if you calculate, you're going to see what you will use. 0.2. All right. 0.2 is very much okay. Amount to risk is $20. 0.2. It will take you time to pass the challenge, but then you will not lose your account early. What do you gain? If you end in 5,000 or you end up making 200 or 400 and you lose 1,000 tomorrow because of over risking or over leveraging. All right. Are you understanding what I'm saying? So, guys, let me quickly invite Bala Francis to continue from where I stopped. Um, I want to see him join. I'm sure he's here with us. Okay, okay. You understand, guys? So you can go on baby pips when you use these things, they will help you. They will help you. I am telling you guys. So guys, let me allow Bala Francis to share his screen with us, and we will continue from there. I will also be here to watch you. I will be happy to do that. Okay. So, sir, you can go ahead and share your screen with us. Thank you very much. You can start out, sir. Hello. Hello, we can't hear you, sir. We can't hear you. I'm not here. Yes, yes, I actually ended my screen share. So Mr. Francis can start with us, but we can't hear you, sir. Hello. What is happening? Maybe, but you can hear me, right? Yes, I know some of you can hear me. So somebody, who was the guy? I think somebody was saying, when, how are you going to do all these calculations when the trader is going to be active? No, no, no. I'm not saying you should stop by and start doing those calculations. What I'm saying is that, okay, I think he's back. What I'm saying is that make sure you do those things before it is time to pull the trigger. Make sure you do them before it is time to pull the trigger. It must not be exact. There is no exactitude or there is no definiteness to this, but then you must have something around that area. You can do a uniform standard lot or maybe a uniform position size for your entry throughout, and you will be very much okay. All right. I think Francis is having some trouble. Francis is having some trouble, but you can hear me now. Who is saying no sound? No sound from my end. Yes, you can calculate pips. This is it. You can select the currency pair here. There is currency pair selection here. Select any currency pair you're looking for. It's here. All right. You can select it. You can select any currency pair you are looking for right here. All pairs are different, but you can select it and it will help you to do that. All right. You can select it. That's why you have the option. This particular platform does a lot of things for you, even including if you want to check percentage loss, or is it percentage loss or growth? As a percentage loss on your account, you can also do it right here. Gain or lose percentage. How much did you make? Starting balance, let's say you have $5,000, all right, on your account. Gain, amount gain, let's say you've made $230. It means you've made 4.6% of your account. So you can add it on your journal. You can do it easily on this particular platform, guys. All right. It's very much easy to do it. Okay. Mr. Francis is back. Let me end sharing so he can continue from his end. Yes, sir. Please, you can do it from your end. Okay. Mr. Francis, we are waiting for you, sir. We are still waiting for you. I think Francis is having trouble with his audio there. All right. So, what is that your question again? No, no, no. We are not talking about, we are not going to talk about anything technicals on my end. I just want to tell you that what you need right now is not technicals. What you need is the right trading psychology and a mindset. All right. So, how many trades should you take in a day? Not more than 2 trades. All right. Not more than 2 trades. Yes, he's going to restart his computer and he's going to come back and continue from where he stopped. How many trades can you take in a day? Not more than 2. And it is very okay to spend the whole day without taking trades. It's not a must. One of the very, very powerful skill in trading is the ability to stand aside and not to even take any action. Yes, we are ICT students. My mentorship is going to be announced very soon, and myself and Mr. Francis will be the mentors in that community. When you will be doing a live video for technical, Lord, yeah, I will be doing it very soon, and this is what we are doing actually. And Mr. Francis will do that part of what we are doing as soon as he comes back with a very good audio. Say something concerning swaps, please. Swaps. When you say swap, is it the swap that happens to your account from your broker? All right. So swaps normally happens because of interest rates, the difference of interest rate of different countries with their currencies. Yes, it is ICT concepts that we teach. $35 will not buy you a very good account from any good prop firm. Yes, if your first trade wasn't really a trade, you can learn from the mistakes so that you don't repeat it tomorrow. We learn every day from our mistakes in the market, all right? The website to calculate lot size is called Baby Pips. This is it. You can see it on my screen. Babypips.com. 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 If you go there, go to this place called Tools. You see Tools? If you come to Tools, you can actually search for anything here. You can just say lot size calculator, right? Calculator. So you can easily do that as easy as possible. Yes, I think I have added you. Okay. Okay, let me add him. Mr. Francis is back. Please, guys, let me end my sharing and add him. You are here, sir.
All right, guys, good morning. Can you hear me?
You are now here.
All right, can you hear me? All right, good morning, everyone. Can you hear me? Can you hear me? All right. Thank you, guys. Thank you for connecting. Thank you, Mr. Solomon, for bringing me to your platform today. And I want to assure you guys that you're going to have a very educating session this morning. And of course, for every other time, we are going to have this kind of session. All right. So, okay, I think now I can see in the comment section that you all can hear me. Okay, so quickly, I'm not going to take a lot of time because time is not on our side. Sorry, I couldn't be in the show at as early as 10 a.m. I had an unexpected emergency I had to attend to, which is why I came in late. However, it's not yet over, so we're going to go through a top-down analysis on how I approach the markets using ICT concept, because I know most of you or all of you here are ICT traders. So quickly, one of the things I do every day I come to the charts is that I like to know what exactly is going on the economic calendar of events before I even start trading any assets. All right, I would like to know what exactly is happening on the economic calendar of events. So I'll quickly take you through the economic calendar of events, which is Forex Factory calendar. Okay, so the first thing I do is I go to the Forex Factory calendar. I do this on a weekend basics and then sometimes on a daily basics. And what am I looking for on the economic calendar of events? I'm looking to identify the high and medium impact news events that will be unfolding during the week or during the coming week. I'm interested in paying attention to the high and medium impact news events. Okay, why is it so? Because we already understand that the fundamentals bring in volatility into the markets. Okay, so the fundamentals do what? They bring in volatility into the market. So usually we like to know. All right, some of you are saying that my screen is not clear. Please, if you can see my screen clearly, just type, let me know that you can see my screen. Some of you are saying you can't hear me. Please, if you can hear me, let me know. Some of you are saying you can't see my screen, and I'm not sure if that's from my end. Exactly. Can you see my screen right now? Great. So since you can see my screen and you can hear me, I think we can proceed, right? I guess it's the network that's giving us headache this morning. If it's blurry, I think it's your network that's the challenge. It's not really from this end. It's your network that is the challenge. Okay, if you are not seeing clearly, that should be your network. So I will just proceed since I know that most of you can see what I'm doing right now. So, like I was saying, I said that the first thing I do or I look out for on the charts every time I come to the charts is I'm looking to identify high and medium impact news events coming up on the economic calendar of events, which is the Forex Factory calendar. So I just go to Forex Factory, www.forexfactory.com, and I go to the calendar. And what am I looking for on the calendar? I'm looking to identify the high and medium impact news events. I'm looking to identify the high and the medium impact news events on the economic calendar. That is Forex Factory. All right, Forex Factory. That is Forex Factory. Sorry, I'm trying to share the Forex Factory. Just give me a minute. Let me just do this. All right, so I believe that all of you can see my screen right now. I had to just do an entire screen share so that you all can just see what I'm doing right here. Okay, so let me know that you're seeing all of this. Can you see this? If you can see this, then I'm okay. I just want to know if you can see the calendar of events. Can you see the calendar of events I'm showing you right now? Very good. So pay attention to what I'm showing you right here. What I'm looking for on the Forex Factory calendar is that I'm paying attention to the high and medium impact news events on the economic calendar. I would like to know the time, the day, and the type of assets the impact is going to unfold on. So, for example, if we see on Wednesday, February 2021, that the dollar is going to have a high and medium impact because of the FOMC meeting minutes coming up around 3 p.m. and 8 p.m. GMT plus one, I already know that we may not see volatility in the market until after the FOMC minute. So the dollar has a reason to consolidate until the news event is unfolded, because that is when volatility is going to come into the marketplace. Okay, and putting in mind that we don't trade news events like the FOMC, NFP, and the CPI because of the speed these news events may bring into the marketplace. So we will stay on the sidelines at least 2 days to a CPI news event, 2 days to an FOMC news event, and 2 days to an NFP news event. We will be on the sidelines and study price action. Okay, so once I know that we have an underlying high and medium impact, especially on the Monday and Tuesday, that means that we expect to see the high or low of the dollar formed around the time that the high or medium impact news event is going to come into the marketplace. And we will do the same for the Euro USD or GBP USD. Specifically, I trade just the GBP USD. All right, so I trade the GBP USD. Some of you are still complaining there is no sound. How true is that? Chief, if you can hear me, just let me know, please, on my WhatsApp DM. Let me be sure that you guys are with me. Okay. So having said that, we'll just go to the chart. And what am I looking for on my trading view chart? I'm interested in knowing the direction of the dollar first before I go down to analyze the GBP USD that I like to trade. It's important that you find one currency pair to stick with. At most, you should trade at most 2 currencies so that you can find consistency in your trading faster than you can ever imagine. Okay, because that's the easiest way to find consistency. Trading just one asset, that's the easiest way to find the consistency you are looking for in trading. So I will start analyzing from the monthly time frame. And why am I analyzing from the monthly time frame? Because we already know by now that the higher time frames are the main driver of liquidity. The higher time frame is the main driver of liquidity. So I'm interested in knowing the direction of the dollar index on the monthly, the weekly, and the daily time frame before I refine down to the 1 hour time frame. And that is where I'm looking to frame my daily trade setups from a 1 hour to 15 minutes time frame. Okay, so it's important we know where the dollar is heading. Why is it so? Why is it so important for us to analyze the dollar before we go to trade the pair or the currency pair that we like to trade, especially if it's a dollar associated pair like the foreign currencies, the GBP USD, Euro USD, AUD USD, or NZD USD? It's important you know the direction of the dollar because the dollar is the benchmark asset for interest rates. The dollar is the benchmark asset for all dollar associated pair. And we already understand that if the dollar is bullish, basic intermarket relationship tells us if the dollar is bullish, all foreign currencies should be bearish. If the dollar is bearish, all foreign currencies should be bullish, with the exception of when there is a market sentiment play in the market. Okay, with the exception of when there is a market sentiment play in the market. All right, so how am I approaching my top-down analysis from the monthly time frame? On the monthly time frame, I'm studying institutional order flow. And how do I do that? I just look out for three things. Number one, I'm looking at where price has traded away from. Number two, I'm looking at where price is currently. And number three, I'm looking at where price is heading to, because that will be the drawn liquidity. The first I said is we are looking at where price has traded away from. Number two, I'm looking at where price is currently at the moment. Number three, I'm looking at where price is heading to. Why? Because that will be the drawn liquidity. And for traders, the drawn liquidity is more important to you than any other thing, because that's why you are trading. You are trading with the anticipation that price is going to go to the next possible drawn liquidity on the monthly time frame, on the weekly time frame, and on the daily time frame, because those time frames are where institutions dwell their positions on, and of course it will be the draw on liquidity. Okay, so studying where price has traded away from, we see right now on the dollar index that price just traded away from a bearish mitigation block right by the left right here. What is a bearish mitigation block? A previous region where we see price action violate structure. What do I mean? Price has been forming higher high, higher low, higher high, right? Higher low. Then we see all of a sudden that there is little bullish momentum because price is failing to take out the previous high. However, price came back and traded below the previous higher low, creating a shift of market structure. This leaves us with a bearish mitigation block, and we're anticipating to see price trade back into that level no matter how long it takes. We like to see price trade back into that level, and should price trade back into that level, we will want to see a bearish reaction. And reason is because in their order of importance, when you're dealing with institutional reference points or PDRAs, we already know that the mitigation block is the first in their order of importance. So you will consider a mitigation block first. If the mitigation block is not there, you are looking for a breaker block. If a breaker is not there, you are paying attention to a liquidity void. If liquidity void is not there, then we look for fair value gaps, then other blocks. So you now see that other block is actually the fifth in their order of importance. It's the fifth, it's not the first. Okay, so should you see a bearish mitigation or a bearish order block and a mitigation block above it, you should be paying attention to the mitigation block much more than the order block, because the mitigation block in their order of importance has more power than the order block. All right, so we see that all of this price range that the dollar created for a bearish momentum has to be mitigated. All of this imbalance has to be refilled, has to be rebalanced by the dollar. So the dollar traded up into a premium level. What do I mean by a premium level? You just pick up your Fibonacci and measure between two price range, between a high and a low. What do I mean? Between a high here and a low right here. Once you do that, 50% of this entire range becomes your equilibrium. 50% of the range becomes your equilibrium. And everything above 50% is being considered as a premium level, and everything below 50% is considered as a discount level. So we see the dollar trade up into a premium bearish
Okay, guys, it seems like Francis has problem with audio and from his end. But can you hear me? Yes, I think there is a little bit of internet glitch. Uh, can you hear me? Yeah, yeah, yeah. You can hear me, right? You can hear me. But then I think Francis is having trouble with his internet connection. All right. He's having trouble with his internet connection. So I just hope he gets back on board immediately. All right. He gets back on board immediately. Basically, we've been seeing what Francis was doing for top-down analysis. A lot of you people don't know how to navigate different time frames and how to be able to take trades, across different time frames. And we've actually seen him showed us why price moves on the higher time frame and why we need the the higher time frame for analysis. The higher time frame always helps us to know where liquidity is going. They are the main drivers of liquidity. And we use DXY to do intermarket analysis because DXY is the common asset across all the major peers. When we say major peers, they are all the major currencies that are paired with the US dollar. All right, this is too basic for you. I hope you know those things. They are the major currencies that are paired with the US dollar. So they are called major peers. So anyone that you have, maybe you have Euro USD, you have GBP USD, you have USD JPY, you have NZD USD. All these ones, they are called major peers. Then they have USD as one of the common currency among them. So it is easy to understand where the liquidity is going to when you start with DXY because DXY is the dollar index. What an index is basically an instrument that measures the strength of that asset. All right. So this guy is like the shadow that tells us what the dollar is. It's basically the dollar. All right. So if the dollar is going up, you will see it from DXY. If the dollar is going down, you will see it from DXY. Are we together on that? So everything Francis was sharing with us is in line with that. He's actually back. So let me quickly go ahead and add him back and have him on board. All right.
Guys, I'm so sorry that I think the network is just being crazy today. I can't explain why that is happening. But can you see my screen right now and can you hear me? Can you hear me? Chief, can you hear me? If you can hear me, let me know so that I can proceed. All right, thank you, guys. Okay, so what I was saying is that I was talking about price trading away from a monthly time frame bearish mitigation block as we see right here. And like I mentioned that in the order of importance, the mitigation block has more power, it has more energy than the other institutional reference point. And if should we see that, we are paying attention to the mitigation block first before the others come to mind. Okay, so I was saying that look at how price traded into the mitigation block, and all of a sudden, for the first time in almost about a year of bullish price action, we see so much energy in the sell candles. The candles are currently telling us a story that we are now in the start of a bearish trend. What does it mean? It means that currently the candles are coming in with so much sell momentum. Study how the previous buy candle, buy trend here only had so much buy energy and little sell candles, and it's totally okay, because in a bullish order flow, we expect to see more of bullish expansions and little bearish retracements. The expansions are supposed to come with so much impulse. The retracement are supposed to be shallow and small. The retracement should be smaller range. All right, so we see that the dollar created a smart money reversal after trading into a bearish mitigation block. We see the willingness of the bearish candles to take out previous candle lows of the monthly time frame. This is telling us a story, and we then see the dollar trade below the 50% of this immediate price range between the low here and the high. This is the immediate price range. And remember that we would like to sell in a premium market when price is above 50%. And we would like to buy in a discount market when price is below 50%. All right. We would like to buy when price is at a discount market, and we would like to sell when price is in a premium market. So the dollar traded lower and created something we call a sell side imbalance, buy side inefficiency. Let's outline it. You can see it here, the low of the sell candle here and the high of the sell candle here created a sell side imbalance, buy side inefficiency. Okay, so the dollar traded up into that sell side imbalance, buy side inefficiency, and created a swing high. What is a swing high? A 3 candle price action that creates, that tells us that the beginning of a reversal is coming into the marketplace and the end of a retracement move. A 3 candle price action is a 3 candle price action that has the middle candle forming the highest high is a swing high, and a 3 candle price action that has the middle candle forming the lowest low is a swing low. Is what? It's a swing low. Guys, can you see what I'm sharing with you guys? Let me know, please. Let me see your comments. Let me know that. All right, great. Great. So like I emphasized that, so the dollar traded into that sell side imbalance, buy side inefficiency, and created that swing high and created a bearish new momentum. You can see price traded lower, and we are seeing that there is willingness in the sell candles to take out previous monthly lows. It tells us that we are currently in a bearish order flow. We are currently in a bearish order flow. So right now, the dollar is in between an institutional order flow entry drill. What is an institutional order flow entry drill? There are actually 2 types of institutional order flow entry drill, but the one we see here is the one that creates a fair value gap by the right and a fair value gap by the left. So you see fair value gap by the right here, as I'm outlining it, and fair value gap by the left right here. This is an institutional order flow entry drill. How are we going to sell the dollar? Should we see the dollar create a lower time frame, like the daily time frame shift of market structure? Within this level, should we see the dollar create a shift of market structure bearish? We are going to sell the dollar into the next drawn liquidity. Where is the next drawn liquidity? It is the old low right here. Do you see that? Old low right here. How are we going to validate this as the drawn liquidity? We identify a fair value gap below it. Then, can you see that there is a clear fair value gap below that old low? That is the drawn liquidity for the dollar index. This is also in confluence with the seasonal tendency chart, because on the seasonal tendency chart, we anticipate to see the dollar go bearish between the first or second week of the month of March. The dollar is supposed to form its high and is supposed to drop into a discount level till the June contract for the seasonal tendency chart. So I want to show you a simple model, which is this. Look at this. Do you see that there's a bearish mitigation block right here? You should identify a mitigation block or an opposing mitigation block on the other end. Should you see that, that is a model on its own. So we see that there's a bullish mitigation block right here. So this is a mitigation block model, from mitigation block here to a mitigation block here. This is where I'm looking to see the dollar trade into, going into the year 2024. I'm anticipating to see the dollar drop into this strong liquidity, the fair value gap, the old low here, sell side liquidity pool residing there, the fair value gap, and ultimately the bullish mitigation block right here. Okay, so you can see on the monthly, we have outlined these levels. We've outlined that the dollar traded away from a bearish mitigation. The dollar currently is seated at an institutional order flow entry drill after creating a sell expansion. You see that price traded into that CB, sell side imbalance, buy side inefficiency, formed swing high, 3-candle price action with the middle candle forming the highest high. It tells us that that retracement move is over and we're about to see a reversal to the downside. Then price creates sell expansion and sell imbalance with a fair value gap right there by the left and right. IOFED, price traded into that level. We are going to go down to the weekly time frame. What are we looking for on the weekly time frame? On the weekly time frame, we are simply looking at bearish expansions and bullish retracement, bearish expansions and bullish retracement. And of course, the bearish expansions should come with so much energy and the bullish candles should struggle to buy because we are not in a bullish order flow. So do you see that after price traded into that CB, sell side imbalance, buy side inefficiency, price dropped massively and traded way below 50% of this bullish order block. This tells us that we are not in a bullish order flow, because if we were in a bullish order flow, we expect to see price action respect at least 50% of the bullish order block right here, which is the bullish order block mean threshold. However, the dollar traded below it. Then the dollar traded up into a bearish order block. On the weekly time frame, you see that the dollar actually traded into a bearish order block on the weekly time frame. Okay, took out liquidity above this high. You see that the relative equal highs here. The dollar took out liquidity and traded into that bearish order block. Should we see bearish shift of market structure on the daily time frame, then we should start looking to sell the dollar into the drawn liquidity. Do you see that? The fair value gap here, the old low here, sell side liquidity pool, the old low here, the monthly fair value gap we outlined right here, and the monthly bullish mitigation block that we already outlined should be the drawn liquidity. Then on the daily time frame, we are studying market structure. What are we looking for on the daily? We just want to see price action form, lower low, lower high in a bearish order flow, and higher high, higher low in a bullish order flow. All right, so currently remember that I told you that the dollar is supposed to trade bullish until the first or second week of the month of March. Then it's supposed to start dropping lower. So during the week, we saw that the dollar traded below this sell side liquidity pool residing here. You see that relative equal lows right here. The dollar traded into that level and the dollar seated on a bullish order block. So the dollar is finding support at the bullish order block and there is no shift of market structure right here. We only have a shift of market structure once we see the body of the candle close below the last higher low here. Until the body of the candle closes lower, we do not have a shift of market structure. So we are still currently bullish until we see that shift of market structure here, which will confirm to us that now we are in the right environment to start selling, because we are in an institutional order flow entry drill on the monthly, in a bearish order block on the weekly. We need to see a shift of market structure, a change of market character bearish. Then we start selling the dollar and we buy foreign currencies. So what am I looking for right now on the dollar index? I'm looking to see that there should be a shift of market structure bearish. Otherwise, we will still anticipate to see the dollar trade one more time above this high or possibly into that volume imbalance. Let me show you that volume imbalance right here. Volume imbalance is a 3 candle price action or a 2 candle price action where we see only the candle wicks trespassing each other. You can see the gap is in between the candle body. The gap is in between the candle body. That's a volume imbalance. So we like to see the dollar possibly trade into that level. The dollar trade one more time into that level. Something like this. Okay. And then the dollar should start to drop from this level going into the drawn liquidity that we already outlined. What is the drawn liquidity on the daily time frame? You can see the old low here, the relative equal lows right here. All of this level, relative equal low. Did you see that there's a fair value gap below it right here? That confirms that there's a drawn liquidity right there on the daily time frame. Then you see that there is also a low resistance liquidity run right here, or relative equal lows, you can call it, right here, and there is still a gap in below it. The gaps below the liquidity levels is the main drawn liquidity. So if I was doing day trading or swing trading, I'm looking at all of these levels I'm outlining on the dollar. So once the dollar gets into this level, once the dollar starts to sell, I'm looking at the dollar trading into this level. So how am I going to confirm that this move has started? I would like to see a smart money divergence between the dollar index, the GBP USD, and Euro USD. What do I mean? Should we see the dollar form, the dollar has formed, or should the dollar form a higher high before this? And we see that GBP USD forms a failure swing and gives us change of character, or Euro USD as well possibly forms higher high. You can see that there's a cracking. Sorry guys, I mean that once we see the dollar form a higher high before the shift of market structure, and we see GBP USD form failure swing before the shift of market structure, then we see Euro USD form lower low before shift of market structure, then we know that there is a smart money divergence. What is a smart money divergence? It is a cracking correlation between the dollar, GBP USD, and Euro USD. Okay, why is this so? Because we know the basic correlation between the dollar index and foreign currency is that if the dollar is forming higher high, we should see GBP USD forming lower low, and we should see Euro USD forming lower low as well. But should you see that cracking correlation, failure of any of them to do the opposite, it confirms to you that smart money is involved and the movement has just commenced. This is how I look at the dollar before I finally go down to the 1 hour time frame. And on the 1 hour time frame, I'm simply looking at price, creating that price range. So you can see that this is the 1 hour time frame, and on the 1 hour time frame, we are in a current market maker buy model. On the 1 hour time frame, we are in a current market maker buy model. Why are we in a market maker buy model? Notice that price has been bearish, forming lower lows, lower high, lower low, lower high. Notice how the lower high, the buy candles were very, very shallow. There wasn't so much energy in the buy candles. The sell candles were very heavy, so much momentum. The buy candles were very little. They were contracting, telling you that the buy is just a retracement. But all of a sudden, after the dollar tapped into that bullish order block, look at how the dollar swiftly created a buy move, and the buy candles, for the first time, are beginning to come with so much momentum, so much energy. This tells you that you are in a current market maker buy model. Why? Because we see an underlying drawn liquidity above that level. Okay, we see that there's a drawn liquidity residing above the relative or old high here. We see another one residing above this level. You see that little consolidation that happened here. That's the drawn liquidity, and of course, it's in confluence with the volume imbalance we outlined on the daily time frame. It's confluencing with the bearish breaker of the 1 hour time frame. What do I mean? Take a look at this. Price took out the high here. Price created a shift of market structure right here. Did you see that price actually has a fair value gap attached to the breaker block that has not been traded to? That fair value gap attached to the breaker block that hasn't been traded to has an old wick in between. This is an institutional order flow entry drill. It has an old wick in between. It has an old wick in between. All right, so that's an institutional order flow entry drill. I'm looking to see the dollar trade into that level, trade into this level I just showed you. So what do we see currently? The dollar created a smart money reversal and low risk buy. You see that price repriced into a previous fair value gap that was violated. So this will serve as resistance turn support. What do I mean? Fair value gap by the left right here. Do you see that? The fair value gap created in the sell expansion lower was violated by the immediate buying move or the immediate smart money reversal. Okay, price traded back into that level. That is resistance turn support. Okay, resistance turn support. We will buy the dollar into the drawn liquidity above all of these levels, buy sell liquidity pool here, buy sell liquidity pool here, and the bearish breaker with a fair value gap right there, which is in confluence with the volume imbalance of the daily time frame. Then we start to sell the dollar. So should we see the dollar trade into this level and the dollar creates a smart money divergence, that is the dollar forming, for example, higher high before change of character, then we see GBPUSD forming failure swing, or the GBPUSD can form lower low as well. Then we see Euro USD form lower low. Then this is smart money divergence. Why? The dollar formed higher high, GBPUSD formed higher low, Euro USD formed lower low. You see that? Cracking correlation. On a normal day, these two are supposed to form lower low, as this guy is forming higher high. Once you see that one of them is failing to do that, that is smart money divergence. So once we see that shift of market structure and price comes back into the internal range, we start to buy foreign currencies and sell the dollar. This is how I basically look at the market, week in, week out. This is how I frame my setups from the 1 hour also down to the 15 minutes time frame and into the higher time frame drawn liquidity. I hope that this brief session is really insightful. I hope that you find it insightful. Sorry for the network inconsistency today. I trust that subsequently we should be able to fix that as well. All right, somebody is asking, do we need to do that every day? No, you don't have to do from the monthly down to the 1 hour every day. However, please, you should do that at least once a month or every week or once in 2 weeks. You should know what's happening on the monthly time frame and outline them on the monthly so that you know where these things are going to. Okay, if you don't know where it's going to on the monthly and weekly or daily time frame, then you are blindly trading, especially if you are doing day trading within 15 minutes and 5 minutes time frame. Make sure you analyze the daily time frame at least to know where the current order flow is on the daily time frame. All right, make sure you do that. The daily time frame is very important if you are doing day trading. Okay, guys, if you have questions, just keep dropping them. Let me see if I can. What about 4 hour time frame? 4 hour time frame will still respect the daily time frame. All right, the 4 hour time frame will still respect the daily time frame. So make sure that you do the daily time frame, please. All right, Chief, are you here? How do we correlate analysis on DXY to GBPUSD? It's just the way I did it. Once you are bullish on the DXY, then you are supposed to be bearish on GBPUSD. This is the mistake most people make that I see a lot. The mistake is that, and this happened even with some of my team members, I did this analysis and I told them that we are going to start buying the dollar once the dollar trades into this level. All right. They started buying the dollar immediately. They saw the dollar started going up without waiting for the dollar to trade into this level. It's actually the institutions manipulating retail traders. If the dollar is not ready and you start to execute on your foreign currency, the dollar will go back to where it's supposed to go, and they will take you out because you are not patient enough to wait for the dollar to be prepared and ready to move. Why do we have to wait for the dollar? Because you know already the dollar is king in the foreign market. The dollar is king,
Can
so the
anybody
dollar
hear
has to be
me?
prepared. If the dollar is not prepared, trust me, you will be manipulated and you will become the liquidity yourself. Somebody is asking if the XY affect US30. Of course, it will, because there's an intermarket relationship between currencies, between stocks, between commodities, and between what is it called now? I said bonds, stocks, currencies, and commodities. They have an intermarket relationship. So the assignment should be that you should study what's their intermarket relationship. Somebody is asking, can I complete the order of importance? I mentioned them right here. I mentioned them. I said mitigation block is the first, breaker block is next, then liquidity void, then fair value gap, then order block, then, okay, I didn't complete them here. Then rejection block, and then old high and old low. They're actually 7. Rejection block, then old high and old low. Can we use the XY for trading gold? Of course you should, because there's an intermarket relationship between the dollar and commodities. They have an intermarket relationship. The XY is now bullish intraday, but on the monthly, weekly, it is, and on the monthly and weekly, it is bearish, sir. Intraday, we want to see it reprice higher into that daily volume imbalance before we can sell, because we already know that for us to sell, we have to be in a premium market to sell and in a discount market to buy. And as you can see, on this current range of the 1 hour time frame, price is in a discount between the high to the low. We need to see it come up into this premium level, then confirm that they are ready to sell, then we sell. Okay? What's your YouTube channel name? My name is Bala Francis. So if you just search me on YouTube, Bala Francis, you're going to see my YouTube handle as well. You just need to search my name. My name is the YouTube handle as well. When I analyze the XY and see it is bearish, no need to do analysis for other foreign currencies. Okay, what that means is that you know exactly what the other currency should do, because the dollar is a driver. So once you go to the other currency, at the time that the dollar is ready, you also will have to outline the levels that you see here, because if you don't outline it, how do you enter? You have to find them. The same way we outlined, there is a bearish breaker on the dollar, we should go down to the GBPUSD and find what's there. It might not be a breaker, it might be a mitigation block or anything, or other block. We find it also. What should be the maximum percentage to risk on evaluation account per day? This will be relative to your risk appetite. To your risk appetite. All right. You should have a maximum number of trades you want to take in a day, maybe 1 or 2, and maximum number of risks per trade, maybe 0.5% to 1% per trade. And if you take 2 trades in a day, if you are using 0.5% risk per trade, you will be left with just 1% risk per day on 2 trades. Okay. I just told you guys my YouTube channel is my name. Okay, let me just show you guys. No, sir. Queen girl, you're asking if the dollar is going bullish. Those other pairs like with USD go bullish. They don't, man. They have an intermarket relationship. I mentioned it. If the dollar is bullish, that GBP USD will be bearish. That's the normal relationship, the basic relationship. All right, that's the basic relationship. Somebody is asking if there's correlation between synthetic and the dollar indices. No, sir. You already said synthetic indices. What about gold? Yes, they do have a relationship. Can we still buy while waiting for the sell? You can buy intraday. You can buy the dollar intraday. All right, guys. So I think that we've done so much for today. I will hand over to King Solomon to round up the session. Possibly has something to tell you guys. Chief, I'm logging out now. Thank you so much.
All right, thank you very much, Mr. Bala Francis, the ICT disciple. Guys, please let's help appreciate him. You can just say thank you in the comments. He has done a wonderful job. He's very, very articulate. I told you initially that we really need him in this part of the meeting. And guys, if you want us to continue this on a weekly basis, then please let me know in the comments so that we can have Bala Francis on a weekly basis. And then if you are watching me right now, you can actually see his YouTube channel right here projected. Please make sure you go ahead and subscribe to his YouTube channel. He's a very, very articulate person. He has been my friend throughout the journey of trading. All right. And for those of you who are in Nigeria, specifically northeastern Nigeria, Maiduguri, he has a trading flow. All right. A very, very good environment for learning. You can come over there. People come over there from all parts of the country to learn from him. And I know some of you will need a physical contact to learn more. All right, a physical contact to learn more. Guys, please do well to go ahead to his YouTube channel and subscribe immediately, so you can also have a lot value from his YouTube channel. All right, he's a very, very articulate um trader. Okay, thank you guys, thank you guys. So this is all for today, and the recordings are going to be right on this YouTube channel. All you need is to come and watch it over to learn more here, what he has said. And guys, I have a very, very good announcement for you. Bala Francis is going to be part of the mentorship we would be launching soonest. So he's part of the mentors that will be guiding you throughout the mentorship. So it's a good thing you prepare for the mentorship. As soon as we announce and our websites are up, you are going to be part of that. All right. Remain small for the website to be fully ready. And I think I can share some things. Let me share the website with you so you can see. It's let me share. All right, so this is the website. It is yet to be fully ready. I know some of you can see it. It will soon be fully ready, and you will have access to it, the courses, different things you will stand to gain in this particular um, mentorship. So Bala Francis is one of the instructors, as well as me, myself and him are the two instructors in the Early Traders Program mentorship. It's going to be one of the biggest practical mentorship platform in Africa and global at large. All right. So this is it. How do you get in touch with Bala Francis in Maiduguri? It's very much easy, Munir. You can the office is located, sorry, the trading floor is located at please, Chief, can you quickly type it for us in the comments? The location of your trading floor in Maiduguri. You can quickly type it for us in the comments. All right. So that those who are interested in having a physical contact can easily access you. All right. I am begging him all through. He is a very, very good trader, guys. I've been begging him to shift the trading flow. At least he should bring one in Abuja so that it can be very, very easy for a lot of people to have physical contact and learn from this great mentor. You know? Don't worry, everything will be on the website. The mentorship amount, the money and everything, different segments of the mentorship. There's going to be money management, there's going to be different sections, and there's going to be general ICT core basics and how you can actually trade with ease. Okay, FGC beside Unity Bank. If you are in Maiduguri, that is the location. FGC beside Unity Bank. Thank you, Sunday. I really appreciate that. Yes, yes. We want to see him in Abuja very soon. I have been begging him to to have one in Abuja so that it will be very, very easy for a lot of people to actually have physical contact and be able to gain knowledge. You know, it's going to be a very practical session. You can see, I think there is a snippet of the trading flow right here. I want to show you quickly the trading flow. I want to show you quickly a snippet of how it looks like. Let me show you that immediately before I close this particular session. We'll soon be rounding up. And those of you who are interested in watching the recordings, you can actually see. So this is the trading flow right here. This is Bala Francis. You can see how excellent their work is there. Traders are doing well there. All right. So you can check it on his YouTube channel. A lot of things happening there. Live trade analysis, you know, physical contacts and guidance. We're gonna have this in Abuja very soon. I'm very sure we're gonna have this in Abuja. And those of you who are from different part of the country can easily come and join. We can have international students coming in to Nigeria to come and learn. That is the goal. We want to have something called Traders University. Traders University, as opposed to what you go and do. This is financial markets, purely financial markets. You're going to come and learn in practicality everything happening. All right. So, guys, this is all about today's class. I hope you have gained a lot of value. I'll be ending the class now. So next week we're going to have something like this. The recordings are going to be there. So thank you, guys. We'll see you next week. Thank you. Make sure you subscribe to have updates from us. Thank you. Bye bye.